Hi, and welcome again to another edition of Market Analysis for today, June 13th of 2025. I'm Gio Bencourt, and this is a recording done by Vantage Markets right about, I'm going to say, 40 minutes prior to the USA session open. Well, when it rains, it pours. The feeling that a raft of unsettling news is piling up is something that investors may become familiar with these days. On top of the protest in California, uncertainty about tariffs, back and forth trade talks with China, and horrible plane crash in India, there are new concerns after Israel surprised Iran with strikes on nuclear facilities overnight. It's way too soon to know the implications yet, but it's perfectly understandable to feel nervous. The human cost of an escalating conflict in the Middle East is deeply tragic, but as an investor, the best advice might be the following. Look at what history tells us in terms of the market's perspective. In fact, last year, strategists dug into how markets typically react to sudden bouts of geopolitical turmoil. It's almost been forgotten now, but there was a brief flare-up between Iran and Israel in April 2024, which was resolved with some largely symbolic retaliations. Now, strategists found that, if anything, events like that usually prove to be buying opportunities because markets usually recover. It makes sense. Stocks will quick to drop and oil prices quick to rise, precisely because no one can quantify the dangers in the immediate aftermath. In fact, when Russia invaded Ukraine in February 2022, the stock market recovery played out on the same day as a major index reversed early losses to close higher. The early market reaction this time was typical. Stocks fell, oil prices surged, and haven assets like the dollar and gold gain. Of course, things can always get worse, and the current conflict could still be in its early stages. But for now, the only thing investors at home can reasonably do is wait and hope the storm clouds pass by fast. Now, with that being said, taking a look at this daily candlestick, so we can see that deep move right when the scenario happened. Obviously, this happened overnight. So we see that the market did the asset made a pretty strong move. It dropped in that essence. Now it's only negative 1.11, but it dropped right up. I will say right around 2 to 3% on this move alone, but it's now retracing. So to find our levels of support, I'm gonna be using the medium of the Bollinger Band, or 20, which is a 20-day moving average, and then a value of right around, just 21,400, something around value. To the upside, I'm speculating that since it's also on Friday, that the market will recover and it will stay within this range. I don't think we'll be having more of a uptrend into the upper Bollinger Band. I think that first level of resistance is going to hold pretty strongly there. So that's for the Nasdaq. Take a look at the S&P 500. Well, as the same token, using those the medium or the 20 moving average, and as far as resistance, 60.50 in the upper Bollinger Band. Do that right there for the S&P. For the Dow, then can we speculate a recovery? Again, the same, just within this range that we see right here. Okay, this range. Now, crude oil. Let's take a look at crude oil. So crude oil, obviously, that spike happened. What was targeted were nuclear facilities. So meanwhile, I asked myself, okay, so and that attack, why didn't crude oil really move even higher? I mean, this move alone was almost 7% move, right? It has, well, actually a bit more, because it has retraced now, and the move does calculate the body of the candle, but it did had a higher 74.60, right? When it opened from 67. 46, and that right there is basically a $7 move. So a $7 move is almost like a 10% move on that, right? So we're going to be asking ourselves, why didn't it move even higher? Or what would make it move even higher? Well, since the attack was directed just to nuclear facilities, the Kark Island was attacked, which is where Iran holds their major supplies of crude oil. That from there, they supply about 1.5 million barrels per day. So if that comes offline, obviously the Saudi Arabia can supply that quite quick. Also, we want to ask ourselves, how could we be assured that that's not going to happen? We can't, right? So we want to be able to see, this escalation, will that be hit this particular item. Now, obviously, we want to understand that their demand and supply in the world. There's a lot of crude oil in the world right now, so this isn't gonna be, be adding to a move to the upside, because there's so much crude oil on there. Now, there's gonna be also on Sunday, on the 15th, they're gonna be the G7 in Canada, so they're gonna be talking about the sanctions on Russian crude oil. So they were talking about that $25 cap on crude oil, but now with crude oil at 70, doesn't make sense. So they're gonna have to reevaluate that. And then obviously, United States, their reserve is somewhere around halfway back into that. That they have that reserve for them, and it was depleted during the COVID and whatnot when Biden was on office. So now they're refilling that reserve, but it's not obviously there yet. So they're about halfway on there. So that's also putting pressure that could also hold crude oil prices around here. Now, how can we come in and analyze this move and find our levels, since we understand that this parabolic movement was because of that attack, and that obviously the surge was because of on that. And now the retaliation, when it comes, most likely will come over the weekend, and obviously the market will be closed. But that doesn't mean that when the market won't move. Obviously, the markets will internally move, but we may not see that moving until the markets open late Sunday afternoon. So there's something called the typical price, and we find that by adding the high of that move, 74.60, plus the low, 67.10, plus the close, 72.04. Yes, and we divide that by 3, and we get the typical price of that movement. So that's 71.24. So that typical movement, 71.24, right around here. From this movement, from this value, we can come in and use the Fibonacci values, right? So like the 0.382% and the golden ratio 0.618%. To the upside, so we multiply 71.24 times 0.382% plus equals, that could give us 71.51. But that value right there is still to be used as a resistance level. Can be used because right now the market is still above that. So we want to come in and do the next one, the 0.618%, which is the golden ratio, plus equals, and that still gives us 71.68. So that wouldn't give us any level of resistance, but we can use this as a typical price, as a pivot point. The market will come towards it, and if it is below the market, it'll act as a level of support, right? And if the market does fluctuate below it, then it'll act as a level of resistance. So that could be used as that from there. And the next a value of reference could be $74, a round value for it. As support goes, well, let's use the where the upper Bollinger Band is, and see if that will give it enough support, because it is the upper Bollinger Band. And will volatility imply, if that does happen, that'll indicate to us that volatility is coming down within a 2 standard deviations, because right now we are like in a 4 standard deviation from the mean. So that would be one place. And the next level of support, well, let's just round values, $66, and see if that would work, and we'll find some levels from there. Okay. Also you could use $70 as a possible level of support initially because of its psychological round value. Then we have Nat Gas. So Nat Gas actually behaved within each range. So I'm gonna leave the same levels that we have yesterday, and looking for a continuation of this sideways movement in Nat Gas. Gold spiked, obviously, because I said heavy asset. So now gold, since we do have previous moves on gold, right? And as where we're trading now, we are actually just looking at reaching or having that level of resistance where a prior candle opened with a gap up. So now the market is there. We did fluctuate above that. So let's just use that swing high from today as a possible level of support. And then the next level of round value. We do have that swing high that took the market towards that 3,500 level and psychological point. So will this continue to happen? Well, let's see. Obviously, we need to come in and analyze this. Now, to use, since we have 3 consecutive candles, right? We could come in and use and measure that movement with our trend-based fib extension from this swing low. Let me turn this on. From this swing low to the swing high that where we are so far, and catch and measure this move higher. So as we see our values, our Fibonacci values, the first one is the 0.38%, which the market is already basically right above that, right? And so it just coincides with our second level of resistance. It coincides with the golden ratio. So so let's just leave it as we have it now, and let's just identify them with our levels. Let's just erase that now, because I grabbed it, but erase that. Okay, now in regards to our level of support, well, we can come in and just use 3,400 as a possible level of support within today's range. And I know that we have a swing high, a swing low, and that will be the extremes. But because of the behavior, the nature, what started first is not something that is from something that we see every single day. So it's just an isolated event. So let's just use that swing low and that swing high as our levels of resistance support, and then internally psychological round value numbers for support, and then the golden ratio for that. Then we have silver. Now we will see a continuation to the upside on gold. Well, I think the market is looking to, because it's over the weekend, and investors are gonna say we don't know what's gonna happen over the weekend. So chances are this is a probability. We want to add probable causes to a side of a trade. So staying long in the market is the most common sense, because obviously we don't know how Iran is going to, or when Iran is going to retaliate, if they're going to retaliate, what's going to happen over the weekend. So yeah, I mean, and 3,500 is just right there. So yeah, stay long, looking for long positions in the market. Then we have silver, which is actually entering into a coffin of congestion, consolidation right around $36. So I'm also anticipating or favoring a move to the upside on the metals. Then copper is the one that actually is reversing or showing a different behavior. So we're gonna use the 50-day moving average as our first level of support, and then this swing low right over here, what looks like a swing low here, double swing low here. Then yeah, just let's see if this is so far that swing low, that rejection from the market, and then will the medium hold is move higher, or will we trade above that and then rebound off of that as we continue to trade lower? So let's see what will happen in copper. Obviously, is the weekend again. So Bitcoin, it did fluctuate to the downside. I mean, this is behavior of Bitcoin. Bitcoin moves by thousands. So let's just use this double bottom here, the lower Bollinger Band, and then as far as resistance, I'm gonna use 108 psychological round value, 108 ish, and then this swing highs making a swing double top there. All right, so recovery of the crypto. So we see the euro did open with a small gap down. It has been closed. This could have been obviously because the dollar, I say, have an asset and people flock to it. So let's just use a previous move where we can actually be able to see how many candles we can touch. So right around this level is somewhere we can come in and find support, perhaps. Then we have the pound. So the pound also moving lower, but it's actually within range of just this range. So I'm gonna tighten up my level of support to that 20-day moving average, and then I'm gonna leave that 134.5. Resistance, I'm gonna move target 137 as my second level of resistance, and then let's just use 136,400 so we can have psychological round value numbers. The reason they're called psychological because is you having a target to reach rather than something that is odd. It's just psychological, like what the word implies. So then we have dollar index. We did see the dollar index at the beginning opening with a gap up, but did fluctuate. It dropped, but now it's recovering. I'm sorry, actually with a strong gap down. It opened with a gap down, and now it has recovered. So let's see if that will be its move. Now this obviously this gap down, it has been closed, but will the market, if things settle down, will the market continue its trajectory lower? Because the administration does want a cheaper dollar. So that's Trump's scenario there for that. So let's see what will happen. Well, that's it for me today. Have a great weekend and stay safe, and I will see you on Monday.